Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in public company filings. And today we're diving into something juicy. ARS Pharmaceuticals, Incorporated, or ARS Pharmaceuticals. Incorporated's latest report, get ready because this isn't just about numbers. It is about a massive new deal that could change their game. So what is this all about? Well, ARS Pharmaceuticals Incorporated is reporting a pretty significant event, a new credit agreement worth up to $250 million. This is a big deal for a company like this aiming to grow and develop its products. The report is dated the 29th of September 2025 and it details a credit agreement entered into on that very same day. This agreement is between ARS Pharmaceuticals Incorporated and its subsidiaries as guarantors and ARS Pharmaceuticals Operations Incorporated as the borrower. The lenders are affiliates of OMERS Administration Corporation and Ray Capital Management LP. Now, Ray Capital is a name you might recognize if you follow this space closely. ARS Pharmaceuticals Incorporated is a Delaware-based company operating in the pharmaceutical space, and their stock symbol is SPRY, trading on the Nasdaq. They're marking themselves as an emerging growth company, which means they get a little leeway on some reporting rules. But more importantly for us, they're telling us they're still in that fast growth phase. Now let's get to the meat of it. Item 1.0. One is all about material definitive agreements. Essentially, this is where they tell us, hey, we just signed a big contract or made a significant deal. And this credit agreement is definitely significant. This credit agreement provides access to up to $250 million in term loans. What is a term loan? Think of it as a big loan that a company takes out to fund its operations growth research and development. The proceeds from these loans are earmarked for two main things. Firstly, funding research development and commercialization of the company S products. And secondly, for general corporate purposes, which is a catch-all for other business needs. The agreement outlines how this $250 million can be drawn in 4 different tranches or chunks. The first tranche, a term a loan of $100 million, was already disbursed on the closing date, the 29th of September 2025. This immediately injects a significant amount of capital into the company. Then there is a term C loan of $25 million, which can be drawn within 2 years of the closing date. But there is a condition here: they need to achieve trailing 12-month net revenues for their product neffy of at least $100 million. This is interesting because it ties further funding directly to their product performance. If neffy is selling well, they get more money. The most flexible part is the term D loan. This one is for up to $100 million, and it is uncommitted, meaning it is not guaranteed. The company can draw it if the lenders agree, which makes sense. It is like a reserve fund they can tap into if conditions are right and everyone is on board. These loans will need to be repaid 5 years from the closing date, which is the maturity date, so they have a decent runway to hopefully grow and generate enough revenue to cover these debts. Let's talk about the cost of this money. The interest rate starts at 5.50% plus a benchmark rate called SOFR, but there is a twist. This interest rate can actually go down by 0.25% to 0.50% based on meeting certain revenue goals that incentivizes them to perform. Also, they have an option to pay some of this interest in kind, which means instead of paying cash, they issue more debt or stock, which can ease immediate cash flow pressure but increases the overall debt burden. The security for this loan is robust. The obligations are guaranteed by the parent company ARS Pharmaceuticals Incorporated and its subsidiaries. And importantly, it is secured by substantially all of the credit parties' tangible and intangible assets and property. This means if things go south, the lenders have a strong claim on the company's assets. Like any major loan agreement, there are covenants. These are rules the company has to follow. They include things like restrictions on making certain investments, taking on more debt, selling off assets, or paying dividends. They also have to maintain a minimum level of liquidity or readily available cash. These are standard for this type of financing, ensuring the company remains financially stable enough to repay the loan. Now about Ray Capital, they are a major player here, serving as the administrative agent and collateral agent. It is also noteworthy that Ray Capital Healthcare Fund LP and Ray Capital Nexus Fund, the SU LP, collectively own over 10% of ARS Pharmaceuticals, stock making them the largest shareholders. And guess what? Dr. Peter Kolchinsky, one of the controlling persons of Ray Capital, as general partner, is also a director on ARS Pharmaceuticals board. This creates a very close alignment between the lender and a key member of the company S leadership. Item 2.03 is a formality that confirms the creation of this significant financial obligation. It basically points back to the details in item 1.01. And for those who want to dig into the nitty-gritty, the full credit agreement is filed as Exhibit 10.1, which is where all the legal jargon and precise terms are laid out. Finally, Exhibit 104 is the interactive data file. This is the standard for making the report machine readable for analysts and regulators. Now let's put on our Warren Buffett hat and see what this all means. ARS Pharmaceuticals Incorporated is essentially leveraging itself up significantly to push its growth and development forward. The $250 million credit line is a substantial vote of confidence from lenders and indicates a belief in the future prospects of their product pipeline, especially Neffy. The tiered structure of the loans is smart, tying further funding to revenue milestones. This shows a pragmatic approach to financing growth. If the product isn't T-selling the company, isn't T taking on all the debt, the involvement of RA Capital is a key factor. Their significant stake in the company and their role as lenders and advisors, plus one of their key people being on the board, suggests a very tight strategic partnership. This can be good for execution as everyone is aligned, but it also concentrates power and risk. If RA Capital S strategy does T-pan out, it impacts the company significantly. A major risk here is the company S ability to generate the required revenue to service this debt, especially since a significant portion of the loan tranches are tied to performance. If Neffy or other development programs face setbacks or competition intensifies, the company could struggle to meet its obligations. Also, the covenants, while standard, could restrict future strategic moves. However, the opportunity is immense. This capital infusion could be the catalyst for ARS Pharmaceuticals Incorporated to successfully launch or expand its products, potentially making it a major player in its market segment. The immediate $100 million disbursement means they have funds to work with right now, which is crucial for any pharmaceutical company facing high development costs. In conclusion, ARS Pharmaceuticals Incorporated is making a bold move to accelerate its growth with this substantial debt financing. The partnership with RA Capital is a double-edged sword, offering expertise and alignment, but concentrating influence. Their success hinges on the performance of their products, particularly Neffy, and their ability to navigate the covenants of this agreement. It is a high-stakes play for high rewards, and I'll be watching closely to see if they can deliver. Alright, that is our deep dive into ARS Pharmaceuticals Incorporated S latest filing. What do you think about this massive credit agreement and RA Capital S involvement? Let us know your thoughts in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and we see you on the next one.